Righty ho, everyone, and welcome aboard. Thank you for joining me for Thursday's edition of Trading Buddies. It is, as always, nice to have you with us. Let me just see if this is streaming. I had a little bit of an issue there. I'll be back in a tick. Everything just crashed at the wrong time. Don't you love that? We'll see if we can restore those pages that I am missing, in particular the YouTube one. Hope you're having a good week thus far. Pretty bloody boring from my point of view. Not that I've had much screen time, but when I have been in front of the charts, nothing really has met my eye. But there are a couple of things today that I think are actionable. So we'll get to that in just a tick. Sorry, I just had a crash. Right, where are we? Control panel. Share screen. And there we go. Righto. Participants, no one's in the waiting, which is you and me, Harry / Gary. How you doing? Gold. Let's talk about gold, shall we? Still in the trade that we entered. Where did we enter? Way back here. Not on a 4-hour chart. Way back here. And it hasn't done a lot. We have got first take profit. The stop loss is at break even. So I suppose that's good for something. The other one that we're in, Euro versus the Swissy, ain't looking that good. In fact, the Swissy's not looking good at all. Where did we get into this? We're just out of the money. We entered here. I'll give this pivot a chance to work, but I may well get out of this trade. It's been boring since we entered that one back here. Nothing has happened, really. I'll give this a chance just to come off the pivots, and if it doesn't, we'll get out of here. Right, back to gold. I haven't been trading the breakout, of course, so I don't know how that's been faring during the week with little action, as I said. Monday wasn't good. Tuesday, high to low 9, which would mean that one entered here. If you took profit, you're okay, but not so great. High 9 o'clock would have been there. That's yesterday. Low down there somewhere. Not so good either. Very, very little on offer for those. Okay, let's see how today goes. We've got a low here at right on the trade line, 1823, and we've got a high at 1833. It's about $10 difference. Let's mark that up. And the low. All right. This is not too bad. We're in the middle of the range, so that's good. I'll get ready for that. We're just about ready to trade it. We're going to buy at the high of that bar, 1833. We'll call it 1834. And the stop loss, which will also be the short entry, 1823. Okay. Take profit. We'll talk about that in a bit. And the sell. will be at 18.23 with the stop loss. Was it 33 or 34? 34. 18.34. Righto. Okay, both are in place. Obvious target is DR1 to the high side, and probably whatever that level there is, 18, 19. So there's not much in the downside, but the upside doesn't look too bad. Righto, so there you have the gold potential breakout for today. As I said, we're still in that trade, have been for over a week. And seriously considering getting out of that as well. Finding it very, very difficult to get through this low. But again, I'll give this pivot a chance to work and see what happens down here. I may close this out as well, just take full profit. That is on offer. There are a few I'm looking at, and I don't know why I chose. Well, I chose Euro Swissy because it was a weekly game changer plus there. Not a plus, but I like the fact that it had come back underneath. It was a false break, really, that we're trading. And actually, that's not what we're trading. We traded this bar here, didn't we? Last Friday. But same sort of thing, bounce and retest. And I could have chosen the Euro CAD, Euro Aussie, Euro Kiwi, but they didn't set up. There were no setups. But now, Euro CAD is very much and has been on my watch list for the entire week without giving me a setup. It did exactly what I hoped it might do, and that's test the monthly pivot. But what I really wanted to happen here is to give me an entry that I could take and get some profit in the bank. Hasn't done that. In fact, it gapped down this morning, so very, very difficult to get into that. What now? Well, I'll probably have to sneak down a time frame or two and wait for a pullback. Or if I have this trade line in place, a break and retest. So break, retest of that, which would be the pivot as well. That would be cool. On the high side, just a retest up here would be good. It's a little bit late, I've got to say. It's been hovering around here for too long. I really like those retests to happen very, very quickly on these false breakouts. But if it gets back to there, which is the daily pivot, of course, that would suit my eye. Euro Aussie, watching this closely as well because we're at that beautiful trade line. Beautiful because it's had frequency of tests. It's come away from it every single time except now. And what I'm looking for here is once, oh, it's already there on the 4-hour chart. Okay.
I have a trade as well, mate, when you're free.
Hello, mate. Take yours. I've got time for this one, so yep.
Okie dokie. So mine is euro dollar. I'm good, mate. Yeah, I'm good. I'm still recovering, of course, but I don't feel too bad. I don't feel too bad. It takes a little while, doesn't it? But it was a really, really good week. Very, very productive.
Nice.
So mine is the euro as well, mate. I mean, I think, I was interested about what you were saying about the euro CAD, and I like the euro as well, but I quite like the euro dollar. And I am going for a 15-minute entry here. Hold on. 15-minute entry on the euro dollar, so it's only just kind of crossing that level, but I've got my targets down to this level here. So let me show you why targets and why stop loss. Actually, let me put this in with the pivots. So what we've had is the test of the pivot, and so far the rejection looks like the on the 15-minute chart looks like a potential lower high here. So I just want this to float down. Obviously, you could take some profit down here, but it wouldn't really give you much in the way of risk to reward. Stop losses are where they are because of this trend line here. And just clearing this high. So, putting it above the trend line doesn't make a lot of sense, but just putting it above the trend line doesn't make a lot of sense to me when this high is in place. So I've just put it up to that high. Now, of course, that might not be the high. It could well be that this is the horizontal level and it could fail there. So it could still get stopped out, but I don't want to go too far above this zone because it's getting a bit more tricky to make the money. But I've got a target down here. We'll talk about sort of reasons why, but I've got a target here because of this trend line along here. So just tipping inside that trend line. This is on the daily. So just trying to tip inside that trend line. Now that would give a risk to reward of around about 3%, 2.5%, 3%. So just shy of 3%. So that's my trade there, mate, that I'm going for. I can go into some detail about the whys fundamentally later on if you like, if you want to get back to your charts. But I just wanted to give you the trade right now.
All right, happy days. We'll go back to Euro Aussie. Now, I'm not 100% on this one just yet, but let's go through the process. Why can't I do what I want to do here? That's weird.
I'll shove you back the screen there, mate.
I just lost the control panel, that's all. Nothing
Easy
new
to do.
It just darts around, doesn't it?
Yeah, it is. It's a tricky little fly thing.
Little geezer.
Little geezer.
So this is the pair, Euro versus the Aussie. Yeah, bit of a neckline break and retest there, but
it looks like it does look like the Euros, in that kind of category today, doesn't it? That it's shaping up for some weakness. So we got CPI data due out in a couple of hours, and that's definitely going to drive it. And it's unlikely that we're going to get a breakdown before that. I wouldn't have thought, but we'll probably stay in and around the area and then see if that CPI data can help us out a little bit.
Yeah. I think because I've got very little play with here, and that data does come out, I'm going to have to take a 55 pip risk to get 19. So I'm not that keen to do that. Perhaps we'll wait till the data does come out to trade that. So it is a clear setup without a question, but I don't like that. And the CPI is not an insubstantial number, of course. That will be watched very, very closely. So it will move the market. It will move the market, and I don't want to get caught up in that. So, I mean, you're fine, you're on a smaller time frame, but I'll be going to get trapped here if I do play that, and we just get taken in before the news. So,
yeah,
I don't think it's worth setting that trade on a 4-hour basis. Interesting, isn't it? The euro's coming down against everything except what I'm trading it on, which is weird.
Which one are you trading?
Swissy.
Oh yeah. It's a difficult one, isn't it? It's always a difficult pair, the Euro Swissy, because they're so closely correlated. I think the Euro Kiwi would have been also in my favourites. I had three: either Euro Kiwi as a short, either Euro Dollar as a short, and the Euro Pound as a short. I probably would favour the Kiwi because of the interest rate hike that we saw yesterday. It sort of gives it a little bit of momentum. So I quite like the Euro Kiwi as a short. I like the Euro Dollar as a short. Yeah, well, I like them all too, mate. I mean, I suppose the reason that I pointed those three out specifically is because they all had something yesterday that was quite hawkish. So maybe aside from the pound actually, but the pound's been sort of building a bit of momentum recently.
The pound's actually set up for me. I'll have a look at that actually.
Pound.
Yeah.
Yeah.
It is actually set up. Where is it?
Yeah, it's got some, the pound has had the UK has had some surprisingly robust numbers in recent times, and we took some big tax receipts as well, which has really helped things out for the pound. Biggest tax receipts in given a sort of a budget surplus for the treasury, and it just, I don't know, there's just I'm finding that the UK is a lot more resilient than I would have given it credit for, and I think Rishi Sunak's got probably something to do with that. I think him and Jeremy Hunt are doing a pretty good job, certainly economically. and there's going to be no tax cuts. So, you know, again, sort of trying to get that surplus back into line a little bit, you know, save things up a little bit. So the UK is looking a little bit more confident right now. I don't know how long it'll last. Oh, how did you do that? Are you floating that market watch around? How did you do that?
It was a fluke, mate. I don't mean to. In fact, I want it to go away. Go away.
See if I can unpeg that. That was pretty cool. I can't see how you do that. I've just brought down the
Mate,
menu. I can't see.
You do wonderful things when I'm not trying. So I am going to trade. I am going to trade this, right? Because I am exposed on the euro versus the Swissy. But if this gets triggered, then the euro should be dropping, and it shouldn't be going up too much versus the Swissy, although the Swissy appears to be weak today. So I've got a break and retest of not only the support trade line, but also of the monthly pivot. There's a little bit of head and shoulders sitting there as well, with a very, very acute neckline, which is what that is, which is now representing a break and retest as well. So that does set up for me. Let's do it.
What's that one, mate? That's the Euro Swissy, is it?
Euro pound.
Euro pound. I'm just going to check that. You know, when I was analysing this, I didn't even notice the head and shoulders. Let me just see.
87.83.
Which is quite remiss.
I won't go too hard because of the exposure to the Euro Swissy at the moment.
It's just under your daily pivot there, is it, mate?
Price now?
Yeah.
Yes, it is. Just
under the daily pivot. Interesting. It's right above mine.
Hang on, I can't see my daily pivot. I don't know if it's below it. I'll go to a smaller time frame. Yeah, it's just above it. You're right.
Just above it. Yeah. Okay.
Yeah. Now, I lost my thing.
Sorry.
0.25. Entry level will be, where's my status? There it is. 87.83. So 0.8783. And the stop loss will be, I'll just trade the bar because the stop loss will be above the monthly pivot and the trade line. So that's cool. 88.23. 0.8823. We'll get rid of the take profit pips. We'll nominate a TP1 at, I'm going to have to trust that level to go.
No, it's a beautiful technical chart, that actually.
87.36. I think I can pinch a little bit less off that. 87.60. That's 23 versus 40. Yeah, that's fine. 0.876. What did I say?
I haven't got a clue.
60. 0. This could go a fair way, so we'll just take a third off at that point. And we'll move, what's our risk? 23, 40 pips. So we'll put that to 12. Why? Because that'll get me just about break even if it takes out our trailing stop. Disable TP2 and sell it. Okay. Now there is another one. Pound versus the dollar. I won't trade this, but I'll point it out. 4-hour chart, maybe. No. Oh, that was the deal. Right. So we've got game changer bar here. A little bit of a gap pullback, if there's such a thing. Then we've got another game changer bar here. And now we've got an inside bar. Now, this doesn't set up as a false break for me because it's been violated too many times. So I've got to get rid of that trade line. But it's also a double cross of the weekly pivot. So I've chosen euro pound versus. I'm not going to trade pound versus the dollar as well, or I could split my risk if I so chose to do. But that bar there is interesting to me. If I can get in and out of euro pound, or not out of euro pound, but safe on euro pound before this actually would trigger, then I would place an order on that long above that bar, stop loss below it. First take profit, monthly pivot, very, very easy, very, very technical trade. So that's pound versus the dollar. The other one is Kiwi versus the dollar. Now, going back to Kiwi, what was the Kiwi news? So I didn't.
Well, they raised
0.5.
interest rates yesterday. Yeah, raised interest rates by 0.5%. But the big thing in New Zealand, Paul was telling me about this when we were away, but they've had huge storms over there, and the RBA,
sure
the RBNZ statement, which I read, they were talking about the situation with the weather being hugely inflationary. So the statement itself was quite hawkish in as much that not saying we're going to do this, but to say, you know what, inflation's not getting under control, and it's probably unlikely to with the situation that we've currently got. So so it does suggest that maybe we do see some further upside with the Kiwi.
Okay, well that destroys this theory because we've got an untested weekly pivot, which is also going to destroy the trade, and we've got a support level. The situation here would be game changer bar, inside bar, which is also a rejection bar of the daily pivot. So the entry would be there, trading straight into that level. And where are you going to put your stop? Where's your risk really here? Is it above the candles here, or is it above the weekly pivot? And that's probably where you'd need to put it. So the reward to risk before you hit support is very, very poor. But I just thought I'd point that out as a game changer plus bar.
Do you know the difficulty right now, mate, that I see with maybe this trade specifically actually is that we've had the RBNZ come out and say something pretty hawkish, and also talk about the fact that the reasons that inflation could be driven are embedded now. That it's going to take them a long time to get that country back in order again because of the destruction. And then you've got the Fed yesterday. The Fed minutes pretty much kind of like striking the same tone, saying, we're nowhere near done yet, and we got a couple of members that actually said a 50 basis point rate hike would be sufficient. Would be certainly something that we consider. So they're both kind of like doing this thing, and for that reason, that's what takes me away from these particular pairs when I kind of hear something in the tone which is similar. We do have PCE numbers later on from the United States as well, so that is going to drive the market. We got core PC prices and GDP data as well. So there's a few things out, and a Fed member. There's a few things out today from the United States, which is one of the reasons that I probably would have preferred the Euro Kiwi, because at least the Kiwi stuff is done, and then you're just relying on the Euro. Now you've got Euro and then the dollar, so it could go one way and then the other very, very quickly. So it makes it difficult.
There you go.
I was just going to say, mate, makes these pairs, when I consider them, not saying that you're in the same boat because you're doing something technical, but when I consider them, it makes these pairs difficult for me to look for technical patterns in.
Yeah, well, I've had Euro Kiwi on my watch list for 2 weeks because of the broadening price pattern.
Yeah.
And it just won't set up for me.
Right.
When it comes off the top here, I need to see a lower high.
Yeah.
And I just haven't. It's just too messy to trade.
Yeah.
Even today, you've got a reversal bar here. You've got an untested daily pivot. So it makes it very, very difficult for me to go short here. Yeah. If we got a daily pivot test, however, which would potentially give me a lower high, a different story. So I've just got to be patient and wait on that. And if it leaks away, it leaks away. There's very little I can do about it.
Well, there's every chance that inflation data comes in hot and the euro does pop to the upside. And then you will, potentially could get the setup. I mean, nobody knows what's going to happen. And if it does come out hot, I'll be flipping positions to the DAX. I'll be looking at something else to potentially trade, and it would probably be the German index. I'd look for some shorts in.
So really, truckload of opportunities potentially today.
I think there are.
Hmm.
I think there are.
I think I've been.
No sort of guarantee that any of them will work out, but there's definitely some options today.
Where for me, and I'm only in front of the charts for like 20 minutes a day at the moment, and there's been absolutely nothing that I could concentrate on since Monday when we got I think a setup that hasn't triggered. That was Aussie CAD.
Yeah.
Aussie CAD short.
Yeah.
And I don't know if I like the directional bias, frankly, but the CAD has got a little bit of a rocket underneath it today, I noticed. And yesterday it had a decent day as well. So I'm just trading that bar there. That's the weekly trade. And as yet, no trigger. And the market's done absolutely nothing, to be fair.
No, I'd be with you on that.
Short, yeah?
I'd be with you on that. The Australia just seems to be in a pretty a sticky phase right now. You know, they had a great year last year because of commodity prices, but they've just started to ease back a little bit. And we saw wage inflation yesterday increase, but coming under expectation, or was it Monday? Or Tuesday actually. So I think there is a case to be made for some weakness in the Aussie, and some strength in the Canadian dollar. I think the Canadian dollar or the Canadian economy, the numbers are odd. You know, you get a really weak number and then a really strong number. They're not kind of like doing this kind of like nice balance thing. But the most recent numbers have been strong. So I think I would be with you. I'd be a bit concerned about the volatility in the releases, but they have been more positive recently, and Australia's just been missing on expectations. So I'd be with you on the Kiwi on the Aussie CAD shorts.
Yeah, well, excellent hedge for my what's the name, Euro Swissy trade would have been CAD Swiss, and I've been waiting for that forever and ever and ever.
Yeah,
it now looks like it wants to set up for me, and all it needs to do is get above here, but it really needs to take out these highs.
Yeah,
because the range is pronounced. You know, we've been here for a long, long time. Why now? Why now would it break? I don't know. From a fundamental point of view, maybe there is data that suggests that'll be the case. Excellent technical scenario here. There's a very clear ascending triangle. There's also a very clear hypotenuse to that triangle, which is now serving as a potential for a false break. Now, if we can get above all these pivots, above the trade line, but I really want to see it up here to take out these highs.
So I haven't heard the word hypotenuse since I was doing GCSEs. Can you explain it to me again? Because I can't remember what it is. What is it?
Sure thing. It's the long side of a triangle.
The long side of the triangle?
Yeah. So let me show you.
Hasn't it got two long sides?
No, we got one.
Okay.
That's your hypotenuse there.
Ah.
Got it?
Got it.
And while we're here, how many degrees?
180, I know that bit.
And that plus that, how many degrees?
That the top one versus the bottom one?
You got to add those together.
Oh, okay. So we got 90 at the top.
Yep.
90 at the top, 108 in total. So hold on a minute. 90 at the top. 108 in total, right? 90 in top. So I've got 90 left. I don't know. Bottom one, 80. 80. So I'm going to say 10.
No, you
10.
only have to give me the total. You don't have to give me.
Oh. 180.
So that's, yeah, exactly. 90, right? That plus that's got to equal 90.
Yeah.
Now, that's got absolutely nothing to do with trading, guys, at all. This is just going back to basic geometry.
Yeah.
So,
well, why is that significant? Because it's got nothing to do with trading.
Absolutely not significant. Nothing to do with anything. So,
yeah,
that's the focus point, is this triangle, right? Now, you'll have technical people all over the world saying that this is going long 70% of the time. I don't necessarily subscribe to that, but I'm happy to go along with it if it sets up. That's cool. But every time I see a triangle, it doesn't mean a thing to me apart from it's a market structure, which is just exactly what I like to see, right? If I've got a structure, I've got something I can play with. So here I can play with the hypotenuse by looking at the break, the consolidation underneath. If I get a re-entry, all I then need is a retest of the hypotenuse. Yes.
Yeah.
Then I've got to trade. Then I've got to trade on my hands, right?
Got it. Yeah, love it.
Right. So once that happens, away we go. And if I miss that, I'll be peeved because I've been waiting on it for so long. But fortunately, I've had I won't say luck on my side. I placed a couple of orders. I think there was probably one here long. There was another one here long, trading a breakout, right? And neither of them got tested, neither of them got triggered, rather. But this one, I will, again, wait. But like I said, the best case scenario is for it to come up here, take those out, then come back and test the hypotenuse. Or, I don't know what that one's called. This one.
I'm going to look it up.
That's a bugger.
Get ahead of the game here.
So either one, that's what I'm looking for, a break and retest of either one now. That would be good. But if this one breaks and is retested, and I chose to enter at the top of the retest candle, I've then got to contend with the high. And as you can see, 1, 2, 3, 4, 5, 6. 6 times it's failed as a breakout. Does that mean there's more probability? Who knows? Maybe there is, but I certainly don't want to take it on without profit in the bank or waiting for it to break and retest. But these are the sort of opportunities that, they've been waiting on for ages. And like I said, I'll be pretty peeved if I don't get something out of them. I could enter now and say, okay, we've got the game changer bar, but I'm not a gung-ho person who likes to trade through 2 pivots and a trade line. That's not what I do. That's too dangerous for me because this could just go bang off these pivots because it's at resistance, right? So that's why I need to see it break and be retested, and that's what I'll be waiting. I don't know where to look, mate. Honestly, all of these pairs are doing pretty much as I intended that they might, but they're still not giving me entries.
Yeah, do you know, I was just looking at the euro in a little bit more detail, and if you look at the euro dollar, you can look at it if you like, but let me see if I can do that actually, just to make it easier. This is the interesting thing about what's going on here. There are I guess reversal patterns happening. The target on the euro dollar is this head and shoulders, and I appreciate that you brought it up because I hadn't looked at the head and shoulders pattern, or I hadn't seen the head and shoulders pattern. I was on a shorter term time frame on the pound, but actually it's definitely there. And this is the euro the euro pound. Sorry, the euro dollar. Euro dollar is looking to sort of like come down to the neckline and then potentially bounce back up again. So that's what I'm after. It just come down and test this neckline, not for it to go through, but just to come and test the neckline. If we look at the pound euro pound, it's a different different pattern entirely, because you got already, as you quite rightly pointed out, we've already got this head and shoulders pattern formed, and we've broken and we've retested it. So the consensus would be that it would retest. It would give us a measured move. And what I find interesting is that the measured move gives us a beautiful technical area down here. So the euro just seems to be shaping up for some it's like a really nice looking technical currency right now against some of these other currencies. Right to these lows down here. Looks like the target on the euro pound. The low back in on the 19th of January. Looks like a potential breakdown, and we're under that monthly pivot as well. So it looks pretty crisp as a potential setup. I don't think that the setup on the euro dollar is as good actually as this, but I guess I just like the data a little bit more with the States, which is why I've gone for it. But this looks really good, and also you got this little trend line across here, which looks like it's retested near enough. You know, if you sort of was zoning
It has
a
on
little
my
bit.
chart.
Oh yeah, it looks like it might well have done actually. Just on when we go in on the 4-hour. Yeah, it has. It's a really good area. That would be a suggestive area for me for a stop. So if that's the they're going to be the target, this 30 up and around about, it's near enough 90 down, definitely 80. So you're looking at 2.5, 3 to 1 risk to reward ratio on this particular setup. So it just, I think, depends on the CPE data. If CPI data comes out and it is weaker than expected, then there's every chance that this is going to work out as a trade. And the great thing about these is, if it doesn't work out, you're losing 1%. If it does, you're winning 3 or 2.5. Let's call it. You're winning 2.5. So you've got at least 2.5 of these trades before, these types of trades before you're starting to lose money. So I think it's a really useful setup. Looking at the indexes, so if we go to the DAX, and the DAX for me would be the counter to it all. I mean, it looks at this stage that if you look at the DAX pushing to the upside, you look at the CAC 40 also pushing to the upside, looking like it's making an edge higher. And then you switch around, then you just sort of like go around the grounds with the euro. We got it pushing down slightly against the dollar here. Let's put it on an hourly, slightly against the dollar, but just a little bit of weakness kind of stepping in. Euro Aussie as well pushing down. As you quite rightly pointed out earlier on, Euro CAD pushing down. Euro Swiss is a bit tricky, but the Euro Pound is relatively stationary, but it looks like it wants to go. Euro Kiwi pushing down. So the consensus right now looks to be, let's have a look at the Euro Sing. Euro Sing also just so far this morning, the first hour, the consensus so far looks to be that we are going to get a weaker CPI print. That's what the charts are suggesting. It doesn't mean that that's what the print will be, and it doesn't mean that either the market participants are really saying that. They might just be trying to drag people into a trade. We don't know why they're doing what they're doing. But if we take
the economist saying? What's the forecast?
The forecast is in line with expectations. So what we're looking for is core CPI year on year to previous 5.2% and coming in line with 5.2%. So that's the prediction. Month on month, negative 0.8. So month on month, they are predicting it's going to be coming down. So getting a bit of disinflation, and that's previous was 0.8, negative 0.8. Forecast is negative 0.8. CPI year on year. Actually looking for a slight uptick, so 8.5 previous, and this year looking at 8.6. So that's just or CPI with everything included, so energy costs and everything else. So they're looking at a slight uptick in that CPI, which I find a little bit surprising, because what we've really seen, if we look at what a couple of things that it's usually food and energy. Food, yeah, I get it. Well, we've had some terrible flooding, and food costs are going up. If we look at oil, then oil has been steadily moving lower over the course of the last few months, and this is January right up here. So we've been steadily moving lower, nearer the lows. So we're looking at month on month. I mean, it's from this month to this month, that is definitely lower. So oil looks like it's coming down. Natural gas also coming down. So you got two, big kind of commodities that we can look at, which would suggest the energy costs might be coming down a little bit. So, whether it's the correct assumption or not is yet to be seen. But the evidence looks like we might well get just a slight dip, or maybe less likely to actually see it above the forecast. So forecasters are going to be much more advanced and detailed, I suppose, than I would be about going to find their information. So they're going to be a lot closer. But just on those two metrics, it looks like that side of it might well be coming down. food, difficult thing. So the core inflation, which is minus food, is has been elevated. You know, we haven't seen core inflation come down as yet. The CPI, which includes food and inflation, has been drifting. You know, really sort of since November last year, it has been drifting. So it might be the energy costs that kind of drive it down, but it's the core CPI. I suppose that the ECB are going to want to see just easing back a little bit, because it hasn't. It's, you know, we've seen last month was 5.2% year on year, and the previous print was the same, and they were the highest. So so we do need to see some easing to the downside, and we haven't seen it. So it's a bit of a, you know, it's a huge guess. But if it does miss, the euro does look like, not that it's in trouble, but it looks like we could get a bit of a push today. So we've got around about an hour and a half before that data is released, and that's when we're going to get our result. But I do think that we can look at DAX and CAC on. If the euro starts to strengthen, then we can look at these particular products as possible weakness, you know, something that we could trade to the downside. Not yet at potential resistance, but it's close. That's the DAX, not that far away, around about 30 pips.
Is it,
you know,
does it often range like that? It's pretty good range.
Yeah, it can. I mean, I suppose more often than not, it does range. And yeah, I think that there's a chance. But if that CPI data comes out weaker than expected, the DAX may well, you know, pushing into this area wouldn't be beyond the realms of possibility. I don't know whether it's going to break through, because some of the data from the index has not been particularly good. But we've seen a gap up this morning as well, which does suggest that there may well be some downside. So the way I'm looking at it is take a trade on a position that could work out. If it doesn't work out, there's an opportunity to hedge that position and you know, possibly get stopped out on the way to the hedge, and maybe make it back up again on something else. That's you know, you've got to be relatively nimble if you're going to do that. But that's that looks to me like a fair way to play it.
Cool. Like I said, I should have this morning probably hedged my Euro Swiss with CAD Swiss long. Haven't done that, and that's got away from me. So I'll just have to sit tight. Not sure what I'll do in an hour and a half if we're looking a little bit precarious on the euro. Yeah, it'll be interesting.
Yeah,
I think, as you say, I'm willing to risk. I've only got 0.25%. I'm willing to risk it. I might as well just leave it there and see if we can get a free ride.
Yeah, what on the Euro Swiss, you mean?
Euro Swiss and pound, euro pound.
Oh, euro pound. Yeah, I mean, you know, so
because they're both in the same direction.
Yeah, you know, and again, the good thing about the pound would be that that there's no data that actually we got Bank of England's MPC member speaking just before that data is released from the euro. So, you know, he's not likely to say anything significant. He's not a you know, he's not the governor by any stretch, but he is talking half an hour before the data is released. So that may just pause that particular movement for a little while. Looking at things like you know, gold as well. We'll have a quick look at gold, because you know, gold again is another one that looks like it's getting pretty close to support. It doesn't look like it's there yet. You know, if you look at long here, that may well be the strongest level. Let's just see this on a weekly. Yeah, it looks like this is the first level on the weekly that could hold gold up, and that's still another $20 below where we are. So I think gold may well have a chance of just easing down a little bit further, and particularly because we've seen we've heard the Fed speakers come out and effectively say, look, we're sticking with this. Don't get overexcited. You guys have got it completely wrong. We've been telling you for ages. You got it completely wrong. We're sticking with this path. And we are seeing those yields just pop up a little bit. So bond traders are starting to listen to the narrative from the Fed, and we're starting to see the 10-year just ease up. And that is usually a bit of a signal for gold. So gold may well struggle to kind of find its footing just yet. And it does make, yeah. Well, you're looking for further downside. Are you on gold? Oh yeah, you're short, aren't you?
Yeah.
Yeah. I think
well,
there's
I mean, like I said, I don't know how many months ago. I'm looking for a lower high on gold off the double top,
Yeah.
and we never really got it.
No.
But now we've got it. Now we've got it.
I know, mate. I find this one such a tricky. You know, you're talking about this, aren't you? There's the double top, and now we got the lower high here. It's just I don't know. I don't know which time frame you can look at with this and kind of get a clear enough picture, because it is literally all over the place. It's kind of got diamond kind of formation look about it, but it's quite messy. I don't know.
Yeah, look, I don't think it was a real issue with the messiness, to be fair, because after the double top and that first lower high, which was a little bit tricky to catch, I've got to say, it just went into trend. Perfect trend.
Yeah. It's
really,
do you know what
if you go to the weekly chart again, you see that first lower high.
This one here?
It just no, that's the second one. First one. After the double top. Yeah, that one.
Oh.
Yeah.
Oh, okay. Yeah.
It just went straight into trend.
Yeah, it did. Yeah.
Perfect.
I think, do you know, but the surprising thing's been the break of this area here, which is actually what we're coming back to, because at this point that was you could argue that one for sure, but that looked like the last significant lower high. But I mean, even that, it's surprising how it just took that area out, and took this area out. Okay,
that's where the seasonal pattern came in, right?
Yeah, the seasonals
and
did
the
kick
gold
in
buyers
there.
and the buyers jumped in.
Yeah, and actually, interestingly, the seasonal bias is now to the downside. So we're certainly getting into that area where gold does tend to underperform. So it could be that
and that's what I'm saying. I mean, really, if you analyze it in that fashion, it's doing exactly as it should do, right?
Yeah. It's
and
just
at the end of the day, if you really think about gold from I guess a macro perspective, and you weigh it up against every other asset, there's absolutely no equivalent that's held its values since we topped out in 2000. Where are we now? 2019 or 2020. So, of course, that says to me, all you need to do is look at the highs and lows and trade it off the highs to the lows and the lows to the highs. And that's pretty much what I've been looking to do. And that's without bias. The bias says to me, eventually gold is going to, go through that 2000 level and just take off at some stage.
Yeah.
But I don't see it that it's and knowing when that is impossible. Of course, you need a crystal ball, or even more than that, because I don't think the market knows either until it starts to happen. And when it starts to happen, away it goes. And for whatever reason, and I don't know what that reason is a nuclear war? Maybe it is. And they're talking about that all the bloody time. Who knows? But in the meantime, if you watch those technical levels, I don't think you're doing too bad.
Here's the seasonals up against it as well, mate. Here's what we're just looking at here. This is the potential for a February high, right here. And you're right. This was really, it starts here. It starts in December. The seasonal bias on gold starts mid December right the way up to the last week, pretty much in February. And what we had on the chart was this going. So December. Was mid-December, so it's about there. Yeah, you're right. That was the period that the seasonal happened. This period here, but the end of February is not until here, which is really why I think gold is a little bit concerning, because in some respects, I suppose it shouldn't have done this in accordance to the seasonals. Okay, you do sort of like see some drifts or whatever, but it shouldn't have done. It shouldn't have come down quite as hard in accordance to the seasonal bias. Maybe here you could argue, but even that is sort of like that takes you right to the end of January. Actually, yeah, maybe. But then there's usually another push to the upside before the big drop, which takes you right down to sort of mid-March. So the seasonals are a little bit out of kilter, actually, little bit. And maybe this was actually, look, that's where the low is. That's the end of November, 27th of November, which is this week here. Yeah, so it actually started a little bit earlier, and the moves.
Yeah,
so the moves might just be a little bit earlier than we've seen, but that they're in play. And I think seasonal traders would certainly argue that there's the seasonal bias is in play, and seasonals are general rather than absolute. So this is in play, but it might well be that we're seeing this dip 2 weeks. Well, that's the end of January, so it's almost 3 weeks before this is coming, which runs in line actually with the rest of it. So we're around about 3 weeks before, which then suggests that we could start to see gold pick back to the upside at the start of March if it's 3 weeks before.
When does that? Well, I'll call it a flash crash. What is that? August?
This one here.
Yeah,
28th of August. That tends to start right the way down to the 27th of November.
Yeah. I've got to start paying attention to those things.
Yeah, because this is the most obvious buy point, isn't it? July sort of tends to be sort of like pretty good. Looks like about the 19th of July. Let's see what happened last year on the 19th of July.
Is Europe back from holidays then, or are they still on holidays?
19th July. That's when they start going on holiday.
Start going on holiday.
Yeah.
Okay.
Yeah, right the way up until September. I mean, it's a pretty nice looking chart when you look at it this way, mate. That's the 19th of July, right the way through to the 28th of August, and this one here is that's March actually. So that's the August period there, just before March. Interesting, really. I mean, you could get down to the minutiae, but you could also say that this move here peaks out around about this point here, and a little bit of sideways price action. Yeah, I don't think you can make the case actually because of that big dip.
Which Sweet's in the room.
Oh, cool.
When's Econachi? What's it called? Econachi. What's it called?
Astronachi.
Whatever it's called. Yeah.
Oh yeah.
When's Astronachi kick in? I wonder if that coincides.
Yeah, it's got to be relatively soon.
I think Phil was telling me earlier, time by degrees is the 27th.
27th.
Yes. So I wonder if Econachi, I can't get it out of my head. Astronachi. Yeah. I wonder if Astronachi agrees with that. Have you got a ready reckoner there, Sweet? I don't know.
27th of March. You got it? Is that right? Or 27th of Feb?
No, Feb.
27th of Feb. Okay, so 27th.
4 days away.
And that suggests upside, is it?
No, it just suggests a change.
A change. Well, it's coming down, so that surely would be up.
Yeah, that's right.
And that would mean coming down here for the next 4 days and coinciding with this particular level.
That'd work, wouldn't it?
That would work, mate. What's happening then? So 27th. Let me just have a look at the calendar as well. Let's see if there's any.
Mind you, I was listening to a guy the other day. Was it Monday? Monday, I was listening to a guy, and he was telling me that we're having nuclear war as of yesterday.
Yeah.
Putin had that big stadium thing, right? And he he was going to announce. Sorry, this guy I was listening to said he will announce full-on re-entry into Ukraine and no holds barred. I don't know if he's done that, has he? I haven't seen the market react to such a thing.
Pretty much.
Really?
Yeah. He has pretty much said that. Yeah, because he's pulling out of a nuclear a deal, and he is basically sort of like saying that the West have started this war and they will not finish. And he went over to there were some warships that went over to South Africa, and the South Africa have said, there's nothing in it, but they are testing nuclear weapons over there. So yeah, I mean, he's certainly ramping the pressure up. And then you had Biden coming out and saying, you shouldn't be pulling out this nuclear agreement. So Biden's gone over to Poland and said that any NATO country is going to get the full support of the United States. So the rhetoric is definitely ramped up.
Okay.
Yeah.
That's interesting.
It is interesting, mate. And you know what? I mean, I'm not usually one for too much in the way of propaganda, but I have kind of started looking around and considering my options of where I could potentially go. It's probably completely pointless, but where I could potentially go if there is anything drops, because they're talking about 12 to 20 minutes, and we could be done over here. So you'd have to be up at the time to know the news, but. Yeah, it sounds pretty brutal. It's not a great situation, mate. Not a great situation. It's just there's so much tension. There's one thing about conspiracy theories, but there just seems to be, regardless of conspiracy theories, there just seems to be so much tension between Russia and the West, and I just can't see how they end it in a peaceful way now.
Yeah.
Almost like it's gone kind of over the point of no return, and it's just difficult. It's difficult to know who can broker some sort of deal. I'd say the only people that probably could are probably the Chinese. They've thrown their support behind Russia in as much that they're sort of saying we're still buddies, but I don't know whether they'd be interested in sort of changing things for everybody, or whether they think.
Well, they keep getting poked in the ribs, don't they? I mean,
that's the problem. That's the problem.
Often deservedly. I mean, what are these balloons? What the bloody hell's going on there with these balloons? For goodness' sake.
But this is the thing, mate. There's no side of the argument I think could make a fair case that they are justified in doing what they're doing. Never, whether it's the West or whether it's Russia and potentially China. No, nobody can make a justification of what they're doing, because people are dying, and it's not really just about people dying. Just regular people. It's the fear and the suffering. It's just, you can't justify that. No matter what your causes, what your reasons for it are, you can't justify it. So they're all of them are as bad as each other, from what I can see, mate. They just I get the poking and whatever else, but I can't see how there's any justification for the pain that is being caused.
Well, they're playing out terror. I mean, each has accused the other for time immemorial of being terrorists. The East accuses the West of being terrorists, and who can argue? Every time there's a little spat around the place, the Americans chime in. Well, more than chime in, they take over and dictate their own policies and their own, systems on countries who have really got no interest at the end of the day. And then you've got the American regime calling the East terrorists, because acts of terrorism, of course. And the East says, well, there's nothing, you're not doing anything less than we are at the end of the day. Yeah. It just keeps going, as you say, but it's a bubbling pot. And what ends it, who knows?
Well, what ends it, who knows? But right now there looks to be only one option that's coming up. It's not pretty. It's not pretty. Anyway, nice to know you, mate. I'll see you on the other side. I mean, part of me just sort of thinks,
I'm not sure which side I'm headed.
Well, I know that I'll see you wherever you go, mate. I think it's one of those things that you just at the end I just told my husband, so I can't. What would be the point really in trying to affect anything, because the outcomes either way are so brutal that I wonder whether you just sort of say what will be, will be, and we'll just get on with it up until the point where we can't anymore.
Well, I think that's the only way I can look at it. I'm not a prepper, and I don't see the point in surviving anything that, if it gets to that point, I don't see the point in surviving it, frankly.
Yeah.
So, yeah, I agree. Just take it as it comes, business as usual. And if these effing idiots can't get their act together, what can I do about it? Not much.
Yeah. Anyway, happy birthday.
This is the Doomsday Show.
Right. Anyway, mate, we're
at the end of the day, with all of that said, we should be buying gold. We should be buying silver. We should be buying should be buying oil. Right.
I know. I love all that. All the people saying, because of the nuclear war, you want to have gold. It's like, what's the point? I won't be able to spend it or get my hands on it anyway. So
toilet paper, mate. That's what you need.
Yeah. The odd vegetable wouldn't go amiss. So let's throw it to the room, mate. I don't know if anybody wants to come on camera, or if anybody wants to maybe send us a message in chat. I've got no messages in my chat, and you guys want us to change the tone of the conversation, then do let us know. Or if you want us to look at anything, or you think that the rest of us should be looking at something, it'd be great to hear that too. But I guess otherwise,
I think we've thrown out a whole lot of ideas for the next day or so. If they play out, they play out.
This is it. We're just sort of discussing our ideas, really, which is the way it is. Oh, we have got a message. Hold on. And this is Catherine. Tomatoes. You're right, Catherine. They are at a shortage. Yeah, we got a shortage of tomatoes, cucumbers, and peppers at the minute, mate, because the weather's been so bad in Europe.
You can have as many shortages of cucumber as you like, but tomatoes, gotta love my tomatoes. But there's a grub getting into my tomatoes, little bastards.
Yeah.
I'm sharing them with wildlife at the moment. But I've got a truckload if you want to come over and have some.
Oh well, I might be over, mate. Yeah, if you're in a safe zone, I'll be there I'd say in a flash, but take me 24 hours.
Next stop to me is Antarctica, so nuclear weapons will still reach here, but we'll be the last one to go, I think.
Well, I think you will. Water's apparently quite a good purifier for that stuff. IDK, if the economy is doing well at all in spite of the numbers. Could you rephrase that, Catherine? IDK, if the economy is doing well at all in spite of the numbers. Oh, I don't know. Yeah. Yeah. Well, I mean, this is the other thing, isn't it? I mean, the US is supposedly quite transparent when it comes to economic numbers. And we got no reason to doubt that. I mean, the organizations that seem to print the numbers are reputable from all accounts, and they've been around for a long time. The likes of the CFTC and those guys, and the SEC, they're quite reputable. So with the numbers that are coming out, there's no reason for us not to trust it. And what the numbers are effectively saying is the economy is shrinking, but is quite robust at this stage. The question more comes down the line, where if those numbers start to accelerate in their in their demise, and the Fed aren't quick enough to pivot back again. I don't really, it seems like people are saying one thing, negative data kind of suggests. Yeah, you're right. You're right, Catherine. You're absolutely right. But I suppose when it comes down to what people are saying, if you mean the people on Bloomberg, they will just get whoever is meeting the current move of the day. So if the dollar's down, let's say, or let's say the index is down, so NASDAQ's down. Yeah, Bloomberg, CNBC, if the indexes are down, they'll ring somebody who's got a negative opinion. And they'll have lots and lots of those guys. Then they'll ring someone with a positive opinion. So they're always going to get two sides of the argument. But the data really can't lie. I suppose that's the point with it. The data can't really lie. So the numbers are the only thing you can end up trusting. I've kind of gone beyond trusting those guys on Bloomberg and CNBC because they've all got an agenda. You know, if Kathy Wood, as an example, talks up Bitcoin, well, she holds a whole bunch of it. So of course she's going to talk it up. The last thing she wants is for everybody to get rid of their Bitcoin, and she'd be the
Yes,
last person.
Most of the people who talk on those forums have stake in the game. They've got meat in the game. You know.
Yeah.
So very, very. And look, I listen to the silver and gold broadcasters all the time now.
Yeah.
And they've all got what's the word I'm looking for? Something in the game. What is that term? Flesh, something like skin in the game.
Skin, yeah, right? Yeah.
That's the word. Yeah. So in that regard, to Catherine's point, all you can go by are the numbers. Do I agree with the numbers? Look at the inflation, the CPI figures. I think they're probably half what they should be in some cases. And I say that because of what I experience. And what I experience is not a 7% increase in my freight bill. It's not a 7% increase in my gas bill. It's not a 7% increase in my fuel bill. It's more like 20%. In some cases, 25%. The price I pay I use LPG gas, right, in a 45 kilo bottle. Now, a 45 kilo bottle of gas in, let me get this right, less than 12 months ago anyway. I can't give you the exact date, but let's go with January 2022. Cost me $118, 118 Australian dollars. In February 2023, 1 year later, it cost me $165. So there's $47 in 118. It's tantamount to 45% increase.
Yeah.
So don't tell me that, that the CPI figure, that we're running at a 7% inflation. That's bullshit. We're running at a lot higher than that.
Yeah.
A lot higher than that. So in that regard, the numbers kind of suit whoever's producing them, I suppose. Yeah. Whether that's manipulated or otherwise, I can't tell you. But at the end of the day,
you're right, mate. Right. Yeah, you're right, and it's interesting that the Fed keep changing which numbers they decide to look at, because I think if they looked at, because I suppose the idea is that the higher ticket items would probably count for more of the inflation numbers, because I don't know whether it's judged on the value of the whole economy, the monetary value of the whole economy, or whether they've got some sort of point system. I suspect it's the value of the whole economy. So if you include housing up against food, you're going to have to see a lot of that food inflation at 45% to account for disinflation in the housing market. And that's
you've got to take housing out of the equation, surely, because that's not a real cost to most people, apart from interest rates, right?
Agreed.
On a week-to-week basis.
I guess what I'm saying is that the Fed may well use that to their advantage.
Yes, indeed, right. Yes, you're right.
So it depends what they decide to include in those.
So it's like toss out the top 3 or 4 and keep the bottom ones.
Yeah. And if the bottom ones, if the bottom ones aren't working anymore, maybe introduce one of the other ones and bring the bottom ones out. That's what they do seem to be doing a little bit of. I did that last week. They emitted something else. I can't remember what it was, but it was a number that it was like, hold on, you've never emitted that before. So it does seem to kind of suit the narrative. Oh, it's cool, Catherine. Typing's absolutely fine. It's just quite nice to get some other opinions in the room. But yeah, it's tough. But I guess in the end, you've got to go with what the Fed's looking at. It's not really what we sort of
we can go by the figures.
Yeah. But the figures that the Fed look at, because they're the ones that are going to affect the currency that we are trading. So if the Fed are looking at CPI that doesn't involve food, because it suits it and energy, then that's what we've got to do as well. And just, it's follow the Fed is the best kind of mantra, I suppose, with this stuff.
But always have in the back of your mind, Catherine, I believe, exactly what we've just, and you've agreed to. Inflation is not at 7% in Australia, or whatever they say it is. It's way above that, in my humble opinion.
Yeah.
And then work out the disparity between what the Fed, for instance, is saying and what you actually feel and know, and work out a way to to take advantage of that.
Yeah,
I believe.
I mean, the other thing is, you see,
economists have no trouble doing that. I'm not an economist. That's why I've got to ask Ash.
Well, do you know,
Ash and say, Ash, how do I play this? Because here's what I think, and here's what I'm being told. How do I play that? And I'm not smart enough to work that out.
Well, the other thing about it, mate, is that inflation has kind of got not two sides to it. You've got nominal inflation and then real inflation. So the real inflation will also be a part of the discounted rate that are provided by the yields. So that's where it becomes even more kind of convoluted. So it's not just kind of like, it's not a flat number. Things have gone up by 45%. Well, that's true. How much of wages gone up by? How much of savings gone up by? So when you start to kind of like, to put everything else in, is it the nominal number that's gone up, or the nominal number that we're judging? Because if it is, things start to sound really awful. Or is it the real number? Because the real number is going to be a lot smaller as long as wages have gone up as well, and interest rates have gone up. So bank deposits, bank accounts pay more as well. So that's where we sit really with inflation. Inflation can be controlled in different ways, which is why the Fed raise interest rates. The reason they raise interest rates is to get the real inflation number back in line and under 2%. But it doesn't mean that prices will ever come back down again. And this is where when you start to think about this is where you can inflate debt away. Because if you get a product like gold, or you get a product like a house, as an example, and you get house inflation. So you buy a house at 100,000, and you get 5% inflation on that every year. Then while the Bank of England or the Fed are raising interest rates, then your house isn't going up by quite as much. So as soon as the flip happens at the end of this whole cycle, when they start to lower interest rates, you see house prices go bang, and that's when you sell. So you actually sell in that kind of environment. That's the sort of the time that you want to sort of start dumping assets again. When it's kind of matured a little bit. But now's not the time really to kind of get rid of stuff. But unfortunately, people have to, and that pushes the prices down because they can't afford the interest rate payments. So it's really interesting.
Guess how that works? You've often heard the expression, the rich get richer and the poor get poorer. Yeah. That's the way it's worked, right? Yeah. That's exactly why the cycle works in that fashion, because the people who have got deep pockets wait for this to happen, then they buy. Yeah. Which is exactly why it's the old adage of buy what you can afford. Because if you can afford it, you can hold it through these periods. If you can't afford it, when the proverbial hits the fan, you've got to get rid of it. And that means you haven't enjoyed any of the accumulation of the price of it. Yes, you've been under pressure at all times, which is exactly where they need us and want us to be. Yeah, yeah. Sell the dream, mate. That's how they do it, isn't it? They sell the dream, so everybody overextends themselves. And then, as you say, the wealthy can just come in, sweep up all the debris, and wait for the debris to become a palace again, and the cycle continues. Yep. So in that regard, nothing's ever changed. Nothing's ever changed, except for the fact that education is now improving to the point that the general, the common man and woman can make better investment decisions on diversification and buying what you can afford. So you can also play that game on a smaller level, and 100%. I mean, that's exactly why we're here talking, is because we're trying to work all that shit out, right? We're trying to work out how to position yourself. And to go back to that question before, Catherine, yes, the numbers are saying one thing and you're experiencing something completely different. I think you trade the numbers and position yourself to what you know is actually happening, if I can put it that way. So the numbers can work in your favor from a trading perspective, but from an investment point of view and a positioning point of view, I think you need to be a little bit outside the numbers. You need to be a little bit deeper than the numbers, what the numbers are saying.
Yeah.
And I think right now is a very, very good time for that. Very good time for that. I listened to, I can't remember the name. Can't remember the name of the organisation, but Charlie Munger is a board member of this organisation.
Berkshire Hathaway, is that?
No.
Okay.
No, outside of that.
Yeah.
It's a bank, I think. It's a bank. But anyway, he did a Q&A for a bit over 2 hours the other day, and I went to sleep a couple of times. But what an interesting guy he is. And I mean, he's 99 years of age.
Yeah.
And if you could just spend even a half hour of that, I don't think I can find the link. I was absolutely just mesmerized. He's
they're
sitting there
impressive, aren't they?
eating peanut brittle, right? I don't know. He must need sugar or something.
Yeah.
So he's just eating peanut brittle for 2 hours and drinking Coke, and just answering these questions with the absolute poise of somebody who's answered them 100 times before.
Yeah.
But with his own little humor twist every now and then. He's dry as a chip, But you could do a whole lot worse than listen to him for 2 hours, I can assure you. And I don't listen to anybody for 2 hours. Absolutely.
Yeah.
Him,
Warren Buffett they are amazing humans, really, because they're both ancient, and yet they as you say, their mind is still right on the ball.
Sharp as a tack. Man, come on.
Don't know what they've been doing.
I'd much prefer to listen to him than Buffett, to be fair.
Yeah.
But I think he's much sharper.
Yeah,
much sharper. At 99, I couldn't believe it.
I think the amazing thing, what you're saying about Coke, because Warren Buffett eats a burger every day. I think he has a McDonald's breakfast every day. And the amazing thing about those guys is that they don't encapsulate really sort of people that go on about kind of health and they don't go to the gym. They are McDonald's every day, and yet their faculties are sharper than most. So I'm sure most of it's genetic, but it certainly suggests that working more on your mind than your body is probably a potentially a better way to go.
Yeah, I've been doing that.
Which is possibly, yeah. Right. On that note, mate, I think we're going to close it up. We are.
No, Catherine, it's not Wells Fargo. It's. Well, you've got the screen, haven't you?
He works for Berkshire Hathaway, doesn't he?
Yeah, he's half of the main game, Berkshire Hathaway. Yes.
Charlie Munger organisation, is it?
I'll see if I can find the link. I'll go to my YouTube history.
Charlie Munger. He's a billionaire. Vice chairman of Berkshire Hathaway, conglomerate controlled by Warren Buffett. Buffett has described Munger as a closest partner and a right man. Oh, that's not coming up. And the Lollapalooza effect.
Daily Journal, not a bank, right? Okay.
The Daily Journal.
Yeah, I've got the thing here. I'll share it with you. You might want to watch it in about 4 different stages because it is, as I say, over 2 hours long.
Yeah, it's cool. These guys.
Share.
These guys are, I wonder why we don't listen to people like this more.
Actually, I didn't even have to go there. I sent it to a mate of mine.
They don't like Bitcoin.
You could say that.
Don't like cryptos, do they? And you know, it's always a question: are they kind of beyond the kind of mindset of Bitcoin and the like? But I mean, you'd suspect not, the amount of things that those guys are saying.
Well, it's very difficult to argue against the way they state it. You see, very difficult to argue.
Yeah.
Right. This is going in the chat. Anybody who wants to listen or have a look, and in particular, one thing I didn't notice was what brand of peanut brittle he was eating. There you go.
Nice one. Thank you, buddy. I've got that link, loaded it up.
All right, I suppose we better get out of here, hey?
Yeah, let's get out of here.
Gold hasn't triggered. Euro's going short. You should be okay.
Let's have a look. Yeah, looks okay, mate. But this is definitely an area that will probably hold up before that data. So we'll see what I'm going to do here later on. But I'll make an assumption in a little while. Yeah, it's bouncing up now. See if we can get through that. The numbers are going to be quite significant. If the numbers are really weak, it comes through. But if they're not, it might just hold. This level might well hold. We'll see.
Okay,
mate. We will see, and have a great weekend, of course, and to everybody in the room as well. Have a great weekend.
Sorry, Tajul, how can I give you that link?
We've got the link.
It's cool. Yeah, but Tajul's on YouTube.
Oh, okay.
Google Charlie Munger Daily Journal, and I think they had their annual general meeting or something like that. Paul P, thanks for the geometry lesson. No problem, mate. Yeah, the Daily Journal, Charlie Munger speech. You'll find it that way. That's exactly how I just Googled it, right? I hope that helps. Yeah, it's fascinating. Found it. Beautiful. Using Bing. Hey, Bing.
Bing AI.
Bing.
Nice.
Fair enough. All right, we're out of here.
Cool.
Have a good weekend, guys. Mate.
Yeah, you too, buddy. See you next. See you on Monday.
You catch up on some rest, huh?
Yeah, I'll give it a go. I'll give it a go.
All right. Thank you for being our trading buddies, everybody, and have a wonderful weekend. And Paul P, I hope your woes go away very, very quickly. We'll see you on Monday. Hooroo. Bye-bye for now.